What's going on, everybody? Welcome on into today's video. I wanted to detail a strategy that I am committing to for the next month plus. And I say month plus is because the month of March is not going to be a month where I'm going to be day trading very much, just because I'm not going to be around and I'm not going to be doing it on my phone while I'm on a mountain. So that's why the snowboard's behind me. I got to put the bindings back on, just got it tuned up. Need to get a new one at some point, but that's what I got working with right now. So this is a screenshot up on the screen. We're looking at the micro S&P futures, but I got this. This is Meta. I'm going to pull up Meta in a second here, and I want to detail this strategy. And this is an example of a contract or contracts that went, I think, like 50 plus, but they went more than like 60% at one point. They might go for more. Who knows? I'm out now, and we have been playing small size because this past like week, 2 weeks, 3 weeks, whatever it's really been, because I've been shitty. I've just been not doing a good job. I haven't been seeing things cleanly. I've been jumping to too many different things. I've been not focused. And the performance has been bad. It's been red. I feel like no matter what I do. So what I wanted to do is, as I kind of took a step back, I'm like, the reality here is that there isn't a problem with the strategy. The strategy's fine, right? The problem is the adaptation, and it's me realizing and identifying when the strategy is full on go, like let's move, versus when it's time to kind of just pump the brakes a bit, slow down, size down, or just take less stuff, or just walk away, or don't even bother, do other things, work on other stuff, that I've got to do anyway, rather than waste time and lose money watching a chart, right? And so it's me kind of realizing when that's the time. The problem that I've had is I would jump from, okay, well, the breakout stuff's not working, so let's go dip buy. And then all of a sudden dip buy isn't working as much, and then it's breakout. And you go back and forth, and then it's, EMAs and trying the VWAP bound, like all these different styles and strategies. It's just like, no, just shut up, pick one, and stick to that one. Make sure that that strategy will provide you with setups, at least, a couple a week. At least, which this one definitely does. And then you execute based off the plan and you move forward, and either it works, doesn't work. And the way I've been kind of managing it is like, yeah, I've been red as of late. And that's because I think I haven't been seeing the market very well. And we've also been chopping around. Not that the chop's an excuse. The chop, honestly, is an excuse to just walk away and just come back when things are less choppy, more directional, right? Across the overall market. But I think that the biggest thing as of late is that I gotta just do a better job, right, of just identifying what's going on and then staying true to the risk, which I've been doing a good job, right? And so in doing that, like, yeah, if you're losing more than you're winning, like, yeah, you might be red, but it takes one winner. And this is an example, because all my losers are around 10% or less, is kind of like what I've been watching on the option contracts, 10% or less, okay? But when we have winners that are 10, 20, 30, 40, this situation, yeah, I only had 2 contracts, right? I'm at least buying 2 on every trade because I want to be able to kind of mess around with the scaling in, scaling out in case it does go big in your direction. You need to have multiple contracts. So to test the strategy, you can't play one contract here. It's just why I'm not trading the small account either, the IRA account, because I can only buy one contract there. So if I can only buy one contract, it's not going to work. I got to be able to buy multiple contracts. And so in buying 2 contracts, I can take my profits at the first target, and then I can have one to ride, in case of a bigger move, which is ultimately how you're going to make up for the small losses. And you don't need to have every trade work out this way, like we're going to see in this video, but you just need to have a couple over the course of a month, course of a year, to be honest, that can make it up for everything, right? So that's all that really matters, as long as you're respecting the risk. And that's something that I never really cared too much about, but I realized how important it is. Okay, let's pull up Meta. I'm boring you, I know. So here's Meta. It's actually looking pretty good here. I executed on the Webull platform, but we'll show you how I looked at this on TradingView. So here's Meta's 30-minute chart, right? Let's just zoom out. Here's Meta's daily chart. Big picture on Meta, right? What do I see? Downtrend breaks. Stocks breaking the downtrend, and it's looking pretty good. Okay, market's actually been kind of weak. Now, today it's strong, but it's been kind of generally weak. Meta's been strong. So we got a strong stock in a market that's turning, relative strength. Relative strength. That's all you got to know. Now, I keep this pretty simple. I in the past would trade some mid caps, small, not smalls. I would say, I was back in the day only small caps, more mid caps, options, large caps, and playing a bunch. The problem is, you go look at mRNA, you go look at ExxonMobil. Not bad in ExxonMobil, but you go look at like Enphase, like the spreads on some of those stocks. Affirm or Upstart, Coinbase. Depends upon the day, but the spreads can be a bit, wider. So it's not as easy. The volume is not substantial on some of the option contracts. So it's not as easy to get in and out quickly and not have to worry. Meta, for example, they're tight spreads. There's volume on every contract you pretty much can look at, and you don't have to worry. You can play out a week, 2 weeks, 3 weeks, the same week. Go, $5 out the money, a couple dollars out the money, you're good. You don't have to worry too much. So I got relative strength. Great. Market's strong today. Great. I'm playing, context of the overall market is nice. I'm playing with the strength. Now, I go to the 5 minute. I'm going to go to the 1 hour chart from here. So I go from this daily chart to get the relative strength. Here's the 1 hour. So what do I see in the 1 hour? I'm going to use these rays because it's a little bit easier to look at. So I see a clear rejection right here, past couple days, double top high on the 1 hour. Okay. Today, I'm like, hey, we're ripping above this. Like we're ripping through. Like this is good. This is good. We're breaking out. Cool. Right. So now I look back, to be honest, volume profile, there's not too much volume here up into like the 185 area. This could have some strength, and it is. It's showing some good strength. I go to the 5 minute chart from there. Here's what I see. So I see Meta above the VWAP. Okay. I will only take longs above VWAP. I will only take shorts below VWAP. That is something that I have tested, seen in the data that I am horrid trying to play trend reversals. Now, you can have huge ones, don't get me wrong, but the problem is that the percentage win rate is dog shit. So I'm not going to play that, just not going to do it. So I see Meta push up. I establish a high resistance right here. That was the high of the day at the time. Pulled back, nice wick, buyer stepping in. I entered this trade on the break. Now, this is a breakout strategy. It's not a strategy. It doesn't always have to be a high of the day break strategy. It doesn't, definitely not. It could be like, a setup where Meta does this and it kind of just like consolidate. And then maybe you play the break at this level for a potential test of high of the day. Like, sure, that's an idea. Or opposite on the backside. It could be low of the day as well. Okay, so I want to detail kind of the strategy, the idea behind it. And what I'm going to be doing for the next, month or two at least to kind of really truly test this out, and only test this. This way I know I'm not taking, random shit. It's this. So this is the case where it works, right? Now, there's other cases this week where we would do this and then we just go, right? Because it's chop. And so, yeah, you have opportunity to take some gains maybe, but not really. So you're going to get stopped out, and I'm doing a much better job of once I see that that's occurring, stopping myself out before it goes down and hits my original risk, which in this case, the original risk was that low right here. But how do we get down there and pressure that level? I honestly wouldn't have liked it and probably would have taken my loss even before we tested that low if we got weak. Because if we broke out, faked out, had a huge wick, and then came right back down, chances are we're not going to break out, right? So that's just seeing things, for a long time. You have a good feel for that, right? Now, this trade, you enter that trade, right? I enter in, and you can see, and I have the timestamp to prove it. It's not some bullshit after the fact. Well, yeah, here, I say as a joke, it's sarcastic. I love that shit on Twitter and whatever. People posting their like little trade reviews after the fact. Well, guys, it was so obvious. I just, I got in right here and I just fucking wrote it up and it was so easy. Yeah, so hindsight, no fucking shit. It's so easy. Yeah, I get it. But in this case, what do we got? 10:53 Eastern time. I'm Central time. So this is my chart is the bottom here is Central time, which is why the market opens at 8:30 a.m. So 10:53 was literally 10:53 East. Oh, I'm sorry, that's a sell. 10:11 Eastern time. So this candle is the 10:10 or the 9:10. It was this candle. So 9:10 start, candle closes here at 9:15. So I got in essentially right here. Okay. Contracts at 2 or a 197 entry on the 185 strikes. But these are for next week. So it is currently the 3rd of March when I'm filming this video. It'll come out next week, but the expiration's 10th. So I got a week plus a time and I don't have to worry. Okay. I'm not playing. If I played same day expirations, because it's a Friday, holy shit, this could have been, like a 200% or maybe more, for all I know. It depends upon what you're trading. So next sell comes at 4 minutes later, roughly. So at that point in time, I'm up like 10%, I don't know, whatever that is exactly, on the contracts. And that's this first push. So 1014 is literally in this same candle, right? We didn't even close yet, but we're up here. We got a massive move. Like that's a big move, okay? Then I see us kind of do this, but what do we see? Like, why did I not get out? I actually put my stop loss on a trailing stop loss about midway through this candle. So it would be just north of my break even on that trade because I entered it pretty much on the break, right there. And it's because if we start to break down, and it's something you can use Fibonacci, some people like to do that. I like to say it relative strength, right? If we are staying and we are not giving back half of the recent breakout move, what does that tell me? We're staying strong, right? If we don't give back half that candle move, we're staying strong. And so it's something you kind of got to do to build out a system. And so for me, on huge breaks like that, we get a massive move in my direction. As long as we stay tight to the top, great. I like it tight. I like it nice and tight at the top. That's kind of how I view it. You can think of it however you want to think of it. I know some of you are going different directions with that, but you know what I mean, right? We're staying tight. We're staying strong. Okay. To the top of that candle on the next 5-minute candle. Okay. And then we do that. We get this next push. And at this point in time, I'm up huge, right? So percentage wise, again, do the math on scale it up, right? I'm just testing this through. I want to, I don't give a shit if it makes $10, if I lose $100, if I make $500. I don't care because the market's here every day, week, month. It'll be here next year, it doesn't matter. It'll be here. So who cares, right? This will be around, right? Just figure out a system that works for you. And that's what I'm trying to do. Now, it doesn't mean this is going to be best for you. It just means that, hey, this is what I'm testing out and, curious your thoughts. Maybe it helps you out. Maybe gives you an idea or it can be applied to something you're doing, So the next sell came at 1053. So that's here. That's on this candle. Why? It's because we started to break down below these lows, okay? Below these higher lows. Once that breaks down, I'm not a fan. I'm going to get out. And I had my trailing stop loss hit. So I put a stop loss up around, I believe, $2.90 or $2.85 on the contracts. And eventually that hit, okay? Now, why didn't I not just sell here? In theory, I could have just taken some more. If I had, let's say I had 10 contracts, if I had 10 contracts, maybe I take off half on that first push, put a trailing stop loss for half. Okay, we hold, we get another big push. Great. So it's a 3-bar play, technically speaking, is what they call it, right? We get one big push. We get this candle right here that kind of stays towards the top, and then we get the next push to new high. 3-bar play. You can take that next contract, or let's say you had 10, right? So let's say I took 5 off on this first push, right? Now we're holding. My trailing stop loss for 5 is right here. Make a next push, big push. Maybe I take 2 more. I take 3 more. And this way I'm just kind of slowly scaling out into the strength. And now I have my trailing stop losses being brought up. And I've got less contracts and I'm just kind of locking it in as I go. Because in theory, this could be a bigger trade. And if it is, you want to be there for that, right? So if you are playing this, and let's say in my example, so that's kind of how it worked, right? So I get rid of this. If you're doing this, and in my example, right, it didn't work. Let's say it faked me out, which I've had like a bunch of that happen this week, right? Scenarios like this, okay? And it goes breaks through and then it comes right back down, right? And my stop loss is right here. And that happens to be 10%. Okay, I lost 10% on the trade. Let's say I toss in $100. I lost $10. I toss in $1,000. I lost $100. Like that, it all comes down to how much I'm going to play or how much scale or how much size. And there's no problem with playing meta contracts because meta contracts, people are trading this stuff all the time. There's tons of volume here. So I don't have to worry about getting in and out and getting filled and having huge spreads and stuff like that. This is why focusing on the big names, is kind of a good idea in that regard. But in this case, I lock in half my contracts at 10+%. I think it was 10 or 11%. Great. And then the next half, I lock in at 30, 40%. So the risk reward here becomes awesome because now, as long as I'm sticking to that rough 10% risk, and sometimes other stocks will be 5%, sometimes it could be 15%. If it's same week expiration, if that's a Wednesday and I'm playing the same week expiration, yeah, it just depends and it's all relative and it comes down to how you want to play it and what you see in terms of risk reward, how much buying power you have, all these different things play into it. If you got lower buying power, you might want to play weekly contracts and you might have, a 20% stop versus a 40-50% target, right? Upside, because those contracts can move a lot more, right? They might be cheaper, but they can move a lot more, right? So it all comes down to, how you want to play it and your sizing, and there's a lot of other things to work on the back end, but that's the general gist. And so if you execute this strategy, it's not a strategy you really have to wait around all day for, because the setup presents. If you see it, you take it. You're going to know pretty quick if it works or not, right? Yeah. Could I have looked at the 30-minute chart here and said, because here was the original break. It was I was looking for this break right here. You can play the 30-minute chart. And by the way, this actually looks like it could be more. It could go for more here, by the way. If it break this high, same setup could be setting up. Breakout here could go for a push even higher. It could even trade it again, right? The problem is, as the day goes on, the setup probability becomes less and less, just from my experience. Especially midday, right? Midday when volume is dying out. Volume is really kind of dying out right now. It's not the best. And it's a Friday, so people might want to just take your money and run. But again, that risk reward is I don't have a problem with the risk reward and stopping out at the 10%, whatever the number is, right? Doesn't matter to me. The problem is, executing properly and finding the setups. Now, the thing is, you want to be looking for the relative strength because that has the higher probability. Is it going to go? No. And what I've seen this week is that you have a stock like, for example, Microsoft, this past week. I'll go to some 5-minute charts so you can kind of see. Microsoft, let's just, show you an example, right? Now, it eventually went on Thursday here for a nice push. But if you had played Microsoft and you were like, hey, this is the high of the day, same idea, established it right here. You broke that high of the day, but how all these wicks, it barely got above and then came right back down. It ended up just consolidating all afternoon for a bigger push later on. And that bigger push was huge. But this happens. And it's fine. You're going to get stopped out on stuff like that. But the trades like this, right, like the metas that we just saw, make up for it, as long as you're not just letting this thing completely destroy you and you're stopping out for, some sort of capped risk, right? And if it's not working and we're in a choppy market, 2, 3, 4 times, that's even a lot, 4 times, maybe you can even just use 3. But the more times it's not working, just step away, come back tomorrow and try again, right? Wait for a better direction, right? Using the overall market as a guide, using SPY as a guide. That's why we look at SPY so much, because, hey, what's SPY doing? If SPY is just doing this, right? If SPY is just doing this, maybe it's not the best environment to be trading directional breakout moves. You know what I mean? So that's kind of my take, my 2 cents. Hopefully this video helps you out in some way, shape, or form. Look at SPY. It's going to make a pop for a new high today here, looks like. But that's a strategy I'm going to be running with for the next, month plus. In the month of March, when I'm around to trade it, I will be here to trade it. And then probably into April as well. So we'll see how it goes. That's what I'm running with, and I'm consistently going to be trading that. It's one of the goals for the month is to just only trade it. That's it. Just trade that alone, nothing else. And we'll see where we're at. So thanks so much for watching. Hope this guys helps out in some way, and I'll see you guys in a future video. Peace.